A recalibration of the global reinsurance market since the January 2023 renewal period has led to a more durable market structure characterized by lower earnings volatility and stronger margins. These factors and others continue to support AM Best's positive outlook on the industry. Here to discuss the lead report and AM Best overall look at the global reinsurance industry around Rendezvous des Septembre in Monte Carlo is Senior Director Mike Lagomarsino. And Michael, AM Best assigned its first ever positive outlook on the global reinsurance segment in June of 2024. Can you update us on the market dynamics since then?
Yeah, sure, John. Since that time, market dynamics have largely reinforced that decision. Both underwriting and overall earnings have remained strong, albeit off 2023 highs, but still well above pre-2023 levels. This despite continued significant insured cat losses, including the growing impacts from secondary perils. Although property cat pricing has declined modestly on some loss-free programs, terms and conditions and attachment points have stayed firm. Reinsurers continue to avoid offering broad aggregate protections. This reflects a structural shift in how risk is shared. Capital strength has also reached record levels. Dedicated reinsurance capital is projected to grow by 7% in 2025, reaching a new record level of $649 billion. This was supported by retained earnings and robust cat bond issuances. The lack of new startups has helped preserve discipline and sustain the improvements made since 2023. Demand for protection remains high, driven by heightened cat activity and geopolitical uncertainty, with cedents purchasing higher limits. Life health reinsurance operations continue to serve as a diversifying source of income and contribution to earnings, and elevated interest rates are driving strong investment income. Overall, this sector remains well capitalized, profitable, and disciplined, supporting AM Best's positive outlook.
Michael, what are some of the concerns that AM Best will be monitoring over the near term?
I would say U.S. casualty remains a concern. Social inflation, third-party litigation funding, and nuclear verdicts have all increased claim severity, leading to ongoing concerns over both rate and reserve adequacy. Several reinsurers have taken reserve strengthening charges, and more could follow. In addition, climate-driven cat risk is another major risk factor. We've now seen 6 consecutive years of insured cat losses above $100 billion, underscoring how secondary perils like wildfires and convective storms are adding to that volatility. And then finally, geopolitical tensions, shifting trade disputes, and ongoing economic uncertainty create increased uncertainty over claims costs, supply chains, and financial markets.
Michael, do you have any final comments or thoughts you'd like to share with us before wrapping up here?
Sure, thanks, John. I would just say in summary, discipline in underwriting, stronger capital positions, and the corrective actions taken since 2023 have redefined the market's foundation. Despite ongoing challenges and uncertainties, reinsurers are in a really good position to manage volatility and the transitioning marketplace. Demand for protection remains strong, diversification is contributing to earnings, and investment income provides an additional tailwind. These factors support AM Best's view that the industry is well positioned to sustain overall profitability and maintain its positive outlook over the near term.
Thanks, Michael. Have a good conference.
You're welcome. Thank you.
You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.